This is David Russell, Global Head of Market Strategy for TradeStation. And today we'll look at major events for investors and traders. Stocks are headed for a losing quarter after hawkish policy from the Federal Reserve hammered prices to a key level. The S&P 500 fell almost 3% between Friday, September 15th and Friday, September 22nd. It was the index's third straight losing week and its biggest drop since March. 9/10 of member companies lost value. Perhaps even more important, Treasury yields shot to their highest levels in almost 15 years. The Fed predicted its target rate will average 5.1% in 2024. That hurt stocks because it's 50 basis points higher than their estimate in June and 75 basis points higher than March. Still, the terminal rate for this year and the current level didn't change. Chairman Jerome Powell said that economic activity has been stronger than expected. He added that the process of getting inflation sustainably down to 2% has a long way to go. Housing data was negative as builder sentiment and existing home sales missed estimates. High mortgage costs continue to weigh on activity. Initial jobless claims also fell to their lowest level since January, boosting interest rate fears. Consumer discretionary stocks, which are sensitive to interest rates and the economy, were the worst performing sector last week. That included casino operators like Caesars Entertainment and MGM Resorts. Tesla dropped 11%. Amazon.com slid 8% after announcing plans to hire 250,000 people before the holidays. Real estate stocks and banks also fell sharply because of the higher interest rates. Healthcare, utilities, and consumer staples declined the least. They're typically considered safe havens. We'll now chart the market. Last week's sell-off landed the S&P 500 near its peak in August 2022. It managed to bounce at the same level in late June and last month. At first, that could have meant old resistance was becoming new support. However, some traders may worry to see it revisited so quickly. Further downside from here could signal a longer-lasting correction. The index is on pace for its second consecutive negative month, which last happened in August and September of 2022. It's also headed for its first negative quarter in the last year. Traders may also watch Cboe's Volatility Index, or VIX, which tends to move in the opposite direction as stocks. The VIX remains below peaks from earlier in the year. Further increases could potentially weigh on the broader market. The yield on the 10-year U.S. Treasury note neared 4.5% after the Fed meeting, its highest reading since October 2007. Long-term charts may suggest the next potential level is around 5.25%, where yields peaked in July 2006 and June 2007. This week marks the end of the third quarter. It has a few economic releases and speeches by Fed officials. News on the auto workers' strike and potential government shutdown could impact sentiment. Meta Platforms also holds an artificial intelligence developer conference on Wednesday and Thursday. Nothing important is scheduled for today. Consumer confidence and new home sales are tomorrow. Costco issues results in the afternoon, and Fed Governor Michelle Bowman speaks. Durable goods orders and crude oil inventories are on Wednesday. Micron Technology reports earnings in the post-market. Thursday brings the final revision of second quarter gross domestic product and initial jobless claims. Chairman Powell and Lisa Cook of the Fed deliver speeches. Nike earnings are also due. Thanks for watching. Please visit tradestation.com for more.